Hi friends, good evening to all. My name is Bijamuna, studying first year HEC at TTWREIS Girls Bhadrachalam. Before entering into the topic, let me share my dream. That is, since childhood, I has a dream that I get a house with full of furniture and a luxurious life with a big car and holidays, vacations, trips, etc. I think you might be also have these types of dreams. So I think you might be also have these types of dreams. To fulfill this, we need money. But how to get money? How to get money on this? We all are on same ground, but struggling to earn money. Let us start our topic, money, banking and inflation. In our ancient days, there is no money, all are started barter system, trading goods or services between two or more parties without the use of money. This is called barter system, exchange of goods one for another. For example, have you ever exchanged your science notes to your maths notes? Yes, we did it many times. This is called barter system, and this is how our ancestor periods used this. But what happened? But unfortunately, it has some limitations. And what are the limitations? Let us see is that difficulties of the barter system. First one, lack of coincidence of want. It is, for example, if a seller has a goat and he wants to exchange it for rice, then the buyer must have rice and he also must able to exchange it for gold. If not, it is a difficulty. Next, lack of store of value. In goods, there are two types. One is perishable, another is non-perishable. Perishable goods like flowers, milk, curd, etc. Non-perishable goods like clothes, wooden, etc. And it is not possible to exchange one for another. Next, lack of divisibility of community. Dividing a community into units and exchanging one for another. It is possible to divide, but all communities are not able to exchange. For example, goats, we can't divide it. Goats, sheep, buffaloes, etc. Lack of common measure of value. Lack of common measure of value is, it is very important to give the terms of community. If not, it is a difficulty in deferred payments. For suppose I want to purchase a goat for marriage in next month in exchange of rice. Coming to the marriage, if the prices of goat is increases or decreases. So these difficulties the barter system has stopped. Then next, people started to use the cowrie shells, beads, stones, where has exchange. And then next, around the region called Lydia, it is now known as Turkey. Their coins were appeared. The ancient kingdom of Lydia, located in the western part of Anatolia in modern day Turkey. So it is now known as Lydia, and then the coins were proved that it is loss of theft. Next, the term money was derived from the name of goddess Juno Moneta of Rome. Juno Moneta was the Roman patron goddess of money and maintaining of money. Easily, Romans senatorial minutes were located in the temple of Juno Moneta within the city of Rome. And the moneta means money. The money was invented by the China people out of their printing of money. And the notes like 2000, 100, 200 were appeared in around. And each country has their own monetary policy. In India, it is known as rupee, and dollar in United States, pound in United Kingdom, yen in Japan, franc in France, ruble in Russia. In India, it is all controlled by the governor. Our present governor is 𝗪𝗧𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗧 RBI. RBI is nothing but Reserve Bank of India. Reserve Bank of India. So RBI is India's central bank, also known as the Bankers Bank. The RBI controls the monetary and other banking policies of the Indian government. So let me tell you the history of RBI. The bank was founded in 1935 to respond to economic troubles after the First World War. The preamble of the Reserve Bank of India describes the functions of Reserve Bank as to securing monetary stability in India and generally to operate the currency. And currency system is the best interest of to the country. The central office to the Reserve Bank was initially established in Kolkata and permanently moved to the Mumbai. Friends, let us now know about role of Reserve Bank of India. In that, issuer of currency. Issuer of currency is nothing but it issues the notes like 2000, 500, 100, 50, 20, 10. Next, Bankers Bank. Bankers Bank is the controls. Bankers Bank control the Bankers Bank, its duty to control the government, and through the CRR, repo rate, cash repo rate, it controls it, and supervisory of financial system, it regulates the powers to the against of rules and regulations. Next, friends, we have learned the role of RBI. Now let us now learn about types of banks. There are two types of banks. A bank is a financial institution licensed to accept deposits and making loans. RBI has two types of banks. One is scheduled bank, another is non-scheduled banks. Commercial banks involve scheduled banks and non-scheduled banks involves cooperative banks. In commercial banks, that is public sector banks, private sector banks, foreign banks and regional rural banks, it is also known as RRBS. So next, let us move on to the next, functions of bank. Functions of bank there are two types, primary functions, secondary functions. In primary functions, accepting of deposit, it includes saving deposit, fixed deposit, current deposits, recurring deposits, and in that granting advances, it includes overdraft, cash credit, loans, discounting of bills. And coming to the next point, secondary functions. Agency functions, it includes in that transfer of funds, periodic payments, collections of checks, periodic collections, other agency functions. Then next, utility functions, draft, lockers, underwriting, social welfare programs, other utility programs, all are included in functions of bank. So friends, on 8th November 2016, the Governor of India announced that demonetization of all 500 and 1000 banknotes of the Mahatma Gandhi series. It is also announced the issuance of new 500 and 2000 banknotes in exchange for the demonetizations banknotes because of to reduce the corruption and the reduce of black money. Now friends, let us know about inflation and deflation. Inflation, if the circulation of money increases, it leads to inflation. Inflation results in a fall in the purchasing power of money in real items. And the deflation, if the circulation of money decreases, it causes deflation. Deflation causes an increase in the purchasing power of money. So in inflation, lack of technology and innovations leads to over dependence on manual labor who demands higher wages due to increased prices. In deflation, improved technologies uses may lead to decreased input cost which is passed on to the customer by way of reduced prices. So it is about inflation and deflation, and it is controlled by CRR. CRRO is nothing but cash reserve ratio, and CPI. CPI is consumer index period. In my conclusion, we have to save money and use it in limit. Thank you, TSET, and And thank you Honorable Prime Minister sir and Secretary sir, my dynamic principal sir and my maintained teachers, my parents and my judges, guardians. Thank you to all.